All right, y'all, weekend's over. Back to work we go. We get a holiday shortened week ahead of us. Thanksgiving's on Thursday, so we better get after it this week. Only a few days to make our turkey money. And I'll tell you right now, I see 3 clues on these charts. They're telling us where that turkey money is made for tomorrow. The first clue is right here on the hourly time frame. We all know right now, we've been pretty bearish here the last few weeks, haven't we? But late last week, they filled that gap from earlier on in October. And for the first time in what seems like months right now, the buyers got above the moving average, held a pullback, and get a nice strong jump running higher. Above the moving average, hold the pullback, and a strong jump higher. We haven't seen that in weeks, of course. Recall that big pop up. They couldn't hold the pullback off the NVIDIA earnings last week. So first time in a month right now, we're holding off the pullback here. Buyers starting to see some signs of life. But there's one big clue, though, I don't want us to forget here on the hourly time frame. That range up there, we have some significant areas of resistance up overhead. And so even though I do believe these buyers are trying to rip control for the bulls here right now, I would definitely respect those bears, expect those sellers to be trying to whack this thing right back down to those lows once again. So buyers are definitely trying to take control of this market right now, but don't count those bears out just yet. That's one big clue here on the hourly time frame. I have 2 more clues on some tick charts, help time some entries for tomorrow. Let's talk schedule though tomorrow, because tomorrow we get some big news, really tomorrow and Wednesday. 2 big things in my mind for tomorrow. First thing is the PPI number and the retail sales coming out at 8:30 Eastern time. We know those numbers are going to be on the radar of the Fed, all the Fed governors. They're trying to decide right now, will they cut rates in December? We saw a big shift in sentiment towards a rate cut over the weekend. And we know the PPI report, the retail sales report will definitely be something the Fed is watching. I'll be watching that tomorrow morning as well. I'm also watching that consumer confidence number at 10 o'clock Eastern time. Remember, anytime we see Red Star News at 10 a.m., we definitely pay attention. So 2 big blocks of news, 8:30 pre-market is the big one tomorrow, consumer confidence at 10 o'clock Eastern time. Tomorrow night, though, make sure you come back tomorrow night because we have some of the biggest news reports on Wednesday. Durable goods, GDP, personal income, all of these numbers are going to be big market movers this week. We'll talk about that more tomorrow night, so make sure you tune back in and watch tomorrow night's video. Back to our charts, though, because the money is made on the charts. We know we're bearish right now on the hourly. We know we're holding off that moving average. First time in weeks we've held off the moving average. But again, let's see if these bears will give us a shot running lower here. On some tick charts though, because the tick charts are really where the biggest clues are right now. By the way, if you're watching for the first time right now, all the time frames, upper left-hand corner, tick charts, guys, they make everything easier, especially entry time. And get yourselves some tick charts. And that moving average right there, by the way, that is the 21 EMA. It is the only indicator we need. Make repeatable profits each week. 2 big clues here on the tick charts. One really important clue was this slow grinding market that we saw today. Remember this, guys, slow grinders. Grinding markets are very tough to stop. Those are the ones that always seem to stick wherever they're trying to go. And the final clue, third clue right now, are 3 ranges. Range right there, range right there, range right there. Now, why would that be a big clue? Well, because the most recent range, this range up here, this range wants to rotate. Ranges love to rotate, and we like to use things like expanding triangles or megaphones. We use things like symmetry, the amount above, the amount below. That range right there wants to rotate. My favorite part about this, though, is what do previous ranges like to do? They love to break out pullbacks. So right now, my eyes are on that 89 level on the S&P and SPY, that 69 level, a little bit lower there. Those areas are going to be hot spots here for these buyers to buy the dip below that trading range. knowing these clues right now, right? Buyers trying to take control, 3 different ranges, slow grinding market going higher. Got that channel drawn here as well. I would love to buy a breakout pullback off that previous range underneath me. In fact, my favorite trade for tomorrow is I would love to get, because we have that potential for a big sell, that big short going lower there, I would love to whack this thing lower, get down into that breakout pullback zone. Now, as always, I'm not going to pick a bottom on this, right? What I'll do is I'm going to wait for price to pull back to that 21 EMA. I'm going to use a classic, what I call a 2-try bear trap. Bears once, bears twice. Use their stops to fuel that move going higher here. And then remind me again, where's the market now trying to go? It's trying to rotate, right? So if we're lucky, nice strong run going lower, strong enough to fool some rookies into thinking this is a reversal. We trap the bears in once, twice, use a 2-try bear trap like I teach in the free video course. And then, don't forget, when ranges are rotating, you need to start adding to your winner. To do that, I'm looking for a shallow pullback, a higher high in price. I'm going to add more to this position if I can get my hands on it, right below that low. Again, we know that ranges like to rotate, so the amount below the range, the amount above the range, that becomes now where we cash that final paycheck. It's a bear trap, 2-try bear trap. It's an add-on separation off the moving average, and we're using the rotation target, other side, to cash that paycheck. Now, one question though, what if we don't get that bear trap down there? Because, for example, we see a lot of times where we see a nice sharp pullback, but we don't get a bear trap down there, and it just whoop and runs all the way back up into that trading range. These can be a bit challenging on the emotions, but if I don't get that bear trap down there, I'm going to shift my focus looking for this, we call a V-bottom pattern. Now, V-bottoms are very simple. Draw a trend line off the high, bring it down off that low, right? That finds a channel, then look left, find some prior swings, and my goal is I want to buy the first test off the low of that channel using any of the entry patterns you guys are learning inside my free video course. So it could be a bear trap, I'll give you a show when you hear. Oftentimes we'll get below that 21 EMA, bears try once, bears try twice. We trap sellers. The most important thing in this one is I want to buy just below one of those swings, and I want the first test off the low of that channel. Bear traps, pullbacks, add-ons as we roll. A lot of examples of those entries inside the free video course. And finally, like I said earlier, we know those sellers are probably going to try to run this lower. Don't be surprised if we see a strong rundown, a pullback, and another leg going lower. Now, anytime we see a breakout of a trading range, we can use that as a measuring leg. We call these retest trades in our trade room. The bottom line is, if I can get this thing to run lower, pop up, and then retest that low again, this is a gift to the buyers. It's a horrible spot to be a seller. So as long as we're below that low, I'm watching for that measured move technique. As I said earlier there, I'm looking for the exact same thing here. Trap those bears in once, twice, squeeze those stops. And remember, ranges love to rotate. So as those bears get squeezed, if I start seeing separation off that 21 EMA, I'm adding to my position, looking for that big run going higher there. Retest trade. I'll tell you, if the trading gods are watching out at us for tomorrow morning, that retest of that low, that bear trap, that add-on, and let that sucker run for the rotation target up overhead. Now, I want to talk about if we keep going higher here. Because the buyers, they may keep on cranking higher. We got Thanksgiving coming up later on this week. Sentiment definitely feels a lot more bullish. So what if we keep going higher here overnight? How does the game plan change? Good question. We're going to cover that in 2 seconds. Before we do that though, let's slow down for a couple of seconds, because I know if you're watching for the first time right now, this could be a brand new strategy for you. I know most folks watching, you guys know these patterns and making money with this. But if you're tuning in for the first time right now, don't you worry. I teach all of these entry patterns in my free trading course. In fact, I have a ton of examples of bear traps, add-ons, range rotations. Guys, the markets are way too good right now not to be making profit with this. So what I'll do is I'll put a link up top there for you, upper right-hand corner, hit that link that popped up there and take that free trading course, because the strategy I teach in that short video series will teach you a simple trick we use in our members trade room that literally tells us exactly where the winning trades are going to be each day. More importantly though, guys, we make our money by timing good entries, don't we? So in that free video series, I'm going to teach you my 4 favorite entry setups so you can time better entries, get your confidence back in your trading. Guys, if you're still missing the best entries right now, if you've lost your confidence in your current trading strategy, what are you waiting for? Hit that link that popped up there and watch that free trading course. Everyone loves all the trade examples I include in that short video series. The best part is it's completely free for you. Also keep in mind too, folks, I'm going to put all the important links you guys need to learn this roadmap down below tonight's video. Start first on that free video course. Most folks start making money all on their own, all from that free video class. So start there first. You'll love that video course link below. And don't forget, I post a lot of videos and charts and mindset stuff on my Twitter feed in between these YouTube videos. If you're on Twitter or the X platform they call it these days, I'll post my handle down there. Again, all the links you'll need to learn more, hopefully earn a lot more, are below tonight's video. Definitely start first with that free video class. Now, where we leave off here, yes. What if we start going higher here, right? What if we go higher here first? What if we run higher here and then wind up pulling back? So this is one of the beautiful parts about ranges. We know that ranges love to rotate, right? So if we do wind up going higher here right now, we now know the amount above the range can now project back below the range. Now, what do you think? Could I sell on a pullback like that? I definitely can. And to do that, I'm going to use a very simple pattern we call a crown reversal pattern. Now, crown reversal patterns are counter trend patterns. They go against the short-term momentum, so they're a little bit less reliable, because anything goes against the overall momentum is always going to be a little bit less reliable. But this is the entry pattern I'm looking for. Now, I always take these trades half size, right? When I'm going against that directional filter right now, it's a half size trade. All this is buyers once, buyers twice. It's above that swing high. That's the key on this. It needs to get above that high, a strong signal candle like I teach in the free video series, and we're off to the races running lower. Again, half size trade for me, quarter size trade for me. You're going against the overall directional bias on this. But again, we know how much the price goes above. We can project now down below. That now gives us our target for our short. And then as we start to pull back here right now, this would not be a good place to be a seller, right? Not in this environment, not with that range below us as a breakout pullback, not with that range rotating off the high here. Now again, I'm not going to blindly buy down here. What I will do though is wait for a bear trap like I teach in the free video course, trap those bears in, and you guessed it, try to trade that rotation right back up again, get that shallow pullback, that higher high in price, and we're adding more on the move back up again. So be aware of that. If we are running higher here overnight, be aware of that crown reversal pattern, that bear trap, that add-on. Keep trading that rotation back and forth as we go. All right, that's our game plan on the S&P. Let's grab the Nasdaq right now. Nasdaq is a little bit different, you'll see right away here, than the S&P here. Still very much a bear market overall on the Nasdaq right now. But like I said earlier, right, the first time in weeks where we've popped above the moving average, held a pullback, and seen some sort of strength coming off of that 21 EMA. They filled that gap last week, and of course, right, that strong run going higher there. Again, it definitely feels like these buyers are making a run for taking back control of this market. But again, like I said earlier, we got that range above us, that breakout pullback zone up above us. You'll notice the measured move off that low. So I would be a little bit surprised tomorrow if we didn't see some attempt from these sellers to run this thing going lower. I would like to use that prior range right below me. Use that range right there for a bit of a breakout pullback. Keep it in mind, right? That 596.25 level there on the Nasdaq. Let's now drill down to our tick charts though, because again, this is the bigger picture stuff. The hourly time frame is good for the bigger picture stuff. But let's think about now in the Nasdaq here. Okay, good. We're finally starting to see that range start to form here up overhead, because as of a couple hours ago, that range hadn't quite totally been nailed down yet. There are three ranges you can see here right now finally on this Nasdaq. This range right here is going to want to rotate, right? It'll rotate back and forth with triangles and pendulum swings. The previous ranges though, this is where the money is made. Range right there, range right there. Interesting to see that gap never got filled this morning as well. Barely missed it. That might be some unfinished business later on in the year this year. But I don't think tomorrow. I would be very surprised tomorrow if we made all the way back to fill that gap tomorrow. Possible, but not very likely with this. Again, big clue, slow grinding markets, right? I heard one of my mentors say a long time ago, if it's slow, it goes, right? If it's slow, it goes. If it's fast, it won't last. Big shout out to Vinny for that tip on that. If it's slow, it goes, right? And so again, a very slow grinder going higher. Remember, don't fight the direction of a slow grinder. And again, those ranges down below us. So just like we said earlier on the S&P, a lot of this is the exact same thing. I would love to see a nice strong pullback going lower. Get those bears to whack this thing running lower. I always hope for a relatively strong breakout going lower, because that will fool those rookies into thinking this is a reversal. Once those bears try a couple times, I can use that bear trap pattern I mentioned earlier. I can use that add-on trade that we said before, that separation off the moving average. There was one late morning this afternoon. Anytime we see that shallow pullback, that higher high in price, you're adding more right below that low. And again, the amount below, the amount above, that becomes our big target up overhead. And the same stuff I mentioned earlier too, right? The same stuff I said earlier, right? If we run lower and pop back up hard, I'm watching for that V bottom trade I mentioned earlier. Find that low, find that channel, get in below those prior swings. These will quickly become one of your favorite trades if we don't get that bear trap like I mentioned before. And then I want to talk about too, what if we keep on grinding higher? This range right now, that range is definitely there. But what if we keep on kind of grinding higher? What if this thing keeps grinding here overnight? The most important thing, now we talked about earlier, if this range holds up, right? If that range holds up, I'm going to use that pendulum swing technique, right? The amount above, the amount below, to find that bottom and pick that pullback off of that high. That's kind of the easy one. But a lot of times though, especially before holidays coming up later on in the week, this week, got big news tomorrow morning, we may keep grinding up here, right? This range may disappear here, and we may keep on grinding here in the overnight. If we keep grinding going higher, at this point, it becomes a really big move going higher. And anytime we see a really big move, my first thought is, let's look for a two-legged pullback, right? Two-legged pullbacks are almost always the best bet after a big move. So if for some reason this range doesn't hold up overnight, if we keep grinding higher here, kind of slowly grinding here overnight, I'm going to make a small adjustment and look for what is basically a measured move pullback. When I say two-legged pullback, think about a measured move. The best ones, by the way, go a bit further than a measured move. So think about 120, 130, 150% on that pullback. Again, I want to see at least a two-legged pullback. The best ones will go a bit more than a measured move. Once with the two-legged pullback now, ideally be off that breakout pullback zone. But the most important thing though is after that two-legged pullback, this will once again feel very bearish. In this environment, it's a really big move going higher. All of that momentum is going to want to run back up and retest that high. And so if I can get this thing continuing to go higher, I'm looking for that two-legged pullback. I'm going to use that bear trap pattern, one try, two try, and buy into those stops. I will definitely I always look for a way to add to my winning position, shallow pullback, higher high, and we add more. Now remember, in a move like this, the goal is to go back and retest the high, right? Not to rotate, right? Again, if this range continues, if this range holds up, yes, then we do look for rotation. But if we just simply keep on grinding higher here overnight, we then make a small adjustment, look for that two-legged pullback, that bear trap, that add-on, and we're going back up to retest the high. And then the way I would sell that is if we keep grinding higher on this, now again, these are half-size trades, right? Not the full-size position, but the way you would sell something like this will be that crumb reversal pattern, right? The crumb reversal pattern will look like this. It'll be a lower low in price. Basically, it's one try, two try for these buyers. It'll be a strong red candle closing back below that 21 EMA. You can see now where that two-legged pullback comes in handy, right? So one leg, two leg, a bit more than a measured move. We take our profit targets off on the crumb reversal, and we then look for that bear trap once again, that one, two try bear trap. Now, why two tries? Because again, I want the stops, right? I want those sellers to be stopped out. I want that squeeze to happen off those stops and run back up to retest the high. Right, guys? That's an easy game plan for us tomorrow if we keep grinding higher, keep watching for that two-legged pullback. Because again, I think you're going to see these bears, they're probably not going to go away without a fight up here, right? So anticipate that deep pullback, absorb that deep pullback, trap the bears in and squeeze this thing right back up to retest the high. The only other variation of this I'm watching for tomorrow is a shallow pullback. You know, what if we don't go all the way to that breakout pullback zone? Right? What if we don't keep going higher here? What if all we get is a shallow pullback right now? Well, shallow pullbacks are fine, but again, because we're still bearish overall, technically still bearish overall, we have to anticipate these bears are going to try to get that second leg lower, that two-legged pullback right now. Then we can buy nice and low. So if all we get is a one-legged pullback right now, yeah, now I'm going to be a little more cautious on the buy side, right? To do that, what I'll do is I'm going to use a slight variation of that two-try bear trap. So bears once, higher high, bears twice. See what I'm doing here? I want to get in underneath that prior swing. What I don't want to do is I don't want to be buying as we go higher here. Because again, we're overall bearish. Right, we might be bullish by the end of tomorrow, but we're not overall bullish just yet, right? We have to expect these bears are going to try, as it goes higher, to run that thing back down again. I want to be in the green on that trade right here. That's why on a deeper pullback, I'll use a typical two-try bear trap, right? Because again, on this one, I have plenty of space for a small amount of risk, right? A big amount of reward. Okay, that's a good risk-reward trade. On a shallow pullback, though, I don't have that benefit anymore, right? That luxury is gone. So because of that, I have to get in as low as I possibly can. It'll always be bears once, bears twice, so stops are in play. I'm getting in right below that low. So shallow pullback, one-legged pullback, get in below prior swings. That will keep us out of trouble in case we do wind up running up and then dumping back over and getting that better trade a bit later on in the pullback. Right, guys? That's my game plan for tomorrow morning. Now, speaking of tomorrow morning, the place to be in our trade room, 8 o'clock Eastern time. Guys, the easiest way to start making repeatable profits is to learn and trade along with me every morning at the opening bell. I'm going to put all the important links you guys need to get started down below tonight's video in the description. Start first on that free video course. You're going to love all those trade examples I include in the short video series. Then come join us in the morning trade room, 8 o'clock Eastern Eastern time, and we'll do it together. In the meantime, guys, hope you learned a bunch in tonight's video. Hope you earned a bunch with this knowledge for tomorrow. Be well out there. Be nice to each other, will ya? And you better be here tomorrow. Adios, amigos. Bye for now.